Good evening once again. Welcome to a webinar from Grip Invest. Like always, whenever we work with a new issuer, we try to make sure that you have an opportunity to hear directly from them, understand the business, as well as understand the investment opportunity. We've got with us Anirudh Ramakuru, who's a co-founder at Navadhan. He's been a chartered accountant and then over 15 years of work experience across financial services. I'll definitely ask Anirudh to add more about his background and also share some on the team at Navadhan. But we deeply appreciate him taking time in the middle of a busy week to do this. Also, thank you to all of you who joined on a Wednesday evening to listen in. We'll try to break this, or we'll be breaking this webinar into two main pieces. Number one, for all of you to understand about Navadhan as an NBFC, understand its business, its scale, its operations. Um, Anirudh and I was speaking before, and Navadhan has not been a frequent issuer on bond platforms. This is the first SDI and the second issuance that has been done on any bond platform. So you may not be as familiar with the name, and we want to make sure you understand the business. Secondly, we'll be speaking about the specific investment opportunity that is currently offered on GRIP, which is a SDI or a securitized debt instrument consisting of a pool of 2,500 loans that are originated by Navadhan. With that, Anirudh, over to you. Would love to hear, just begin with a little bit of background about yourself, and if you want to share a little bit about your co-founding team at Navadhan.
Okay, Nikhil, thank you. Firstly, thank you for having me over on your platform. It's an honor, and like I've told you before, it's a pleasure to be associated with you and your team. Uh, so quickly, my name is Anirudh Ramakuru. As Nikhil said, I'm one of the co-founders of Navadhan. We started this company in 2019. I manage largely the entire liability at this place, which is dealing with a whole lot of banks, NBFC, DFIs, and now platforms like yours as well. Overall, I have about 20 years of experience. As Nikhil said, I'm a chartered accountant by qualification. I've been in financial services for a little under a decade and a half. My career has largely revolved around raising money in the form of, again, equity, debt, structured finance, dealing with Indian organizations, international organizations, and this is pretty much what I have done. So again, very familiar to raising money, but it's a pleasure to associate with Grip for the first time. Let me just quickly also talk about my co-founding team. If you could just allow me a second. Yeah, is this visible?
Yes, Anirudh.
Right. So, as I said, I'm one of the co-founders. This company is led by a gentleman called Mr. Nikhil Aggarwal. He is somebody who's a veteran in the financial services industry, worked at various banks, NBFC, rating agencies. He's also been the ex-CEO of a listed MFI called Spandana Spooty. Then we have Mr. Amit Biswal. He was the ex-CBO of Spandana Spooty, and for obvious reasons, that's how they've connected. Again, somebody who's got huge experience in uh, dealing with business on the ground in rural. He's managed nearly 10,000 crores of AUM, managed nearly about 15,000 employees, and managed about 25 lakh customers. So somebody who's really, really seasoned. Then we have Vijay Haswani. He's been a credit product risk person most of his life, worked at various banks and NBFCs again, and he's the one who tells us how we do what we do, and how should our products look and to for the customer. And I'm Anirudh, like I said, and I'm the one who needs to bring all the money that we lend to the company. Other than us, we also have three members on the leadership who manage our technology. So there's Mr. Sanku Leri, again, a veteran in the financial service industry on the tech side. He was one of the people who worked on the YONO app of SBI. This was nearly a decade and a half ago. Varun Mishra is one of the younger guys in our team, but he heads our engineering, and he's got an army of engineers that is building what we are building. since we are not just a lender, but we are a fintech digital lender. The technology is built in-house, and Varun is one of the people who's driving it. Vipin is our third lead on the tech front. He manages the product and all the integrations that we have with whole lot of partners and vendors. Other than that, obviously, we've got external board members. Uh, Prerna Saxena is ex-IFC. She's again a veteran um, in the impact space. Mr. Natarajan is somebody who's been on boards of multiple financial services companies, and we learn from him, in every meeting we have with him. Mr. Bhoi is a recent addition. He's ex-RBI and again strengthens our governance and compliance. Mr. Aparajit Bhandarkar, he represents one of the investors, that is Varanium. So yeah, that's about us.
Yeah, I think one of the things that really stood out when we started speaking with you, Anirudh, was the quality and the experience of the team. Despite being an NBFC, which was incorporated, roughly 6, 7 years ago, I think the quality of caliber and experience that goes into this is obviously much more than 100 years. I think the first question that comes naturally to mind is that with experience, including leading Spandana Spurti, which obviously is a leader in its own right, what were the insights that led to the focus that Navadhan has? If you could talk a little bit about that focus and where it came from as an NBFC, I think that'll be good context to then go into the scale of operations and P&L as well.
So, between the four of us, we worked in various sectors in lending, right? So while Nitin and Amit spent a lot of time in microfinance, Vijay spent a lot of time in mid-corporate lending, I spent a lot of time in corporate lending. We had pretty much seen a lot of the entire, everything that there was in lending in banks and NBFC. And we also together have a lot of experience in lending to a lot of NBFC, through our previous avatar. Nitin has obviously got experience in rating a lot of these organizations. And I think over the last 15 to 20 years, we've kind of seen the industry change. We got an opportunity to see, the 2010 Andhra crisis. We got an opportunity to see how GST impacted the various segments. We saw what happened in COVID. We had, in fact, incorporated our company by then, but we didn't have our license until the first wave of COVID hit us. So through our first wave of COVID, while we were building technology, we had an opportunity to see how each segment is reacting to an event like this, right? With time, what we realized was that the MFI industry is very, very large. The corporate world is, the formal lending business is a lot easier, and there's enough players over there, enough service providers over there, those that are GST backed, income tax, ITR backed, bank statement backed. There was a segment in between, which was above microfinance and which was below the formal and SME lending that we felt was it did have a few service providers, but we felt that the space and the gap was extremely large. Then during COVID, the definition of priority sector lending got widened by our finance ministry, and this segment also came under PSL, which suddenly opened up the gates to capital to this segment as well. So we were very well poised. We always wanted to do this. We did not want to go into the typical microfinance, and we did not want to go to the larger segment, which is where you're competing with banks as well. And this space between 1 lakh to 10 lakhs is where we wanted to focus. Rural, where it's a little hard to do the underwriting, but it's highly rewarding.
Understood. If you could paint a picture for us, with words to say, my average customer in this segment is is a rural farmer, a business, small shop owner. But if you could help us paint that picture so that we can all relate to what you mean by that layer between above MFI but below formal business.
Sure. So let me just take a minute to tell you what my customer would look like, and then I'd like to show you some slides to give you a visual impact of who my customer really is. So, my typical customer, so I lend to a household, I don't lend to an individual. This is typically a rural household of 4 to 6 adults, earning adults, involved in multiple trades. Because it's rural, most of them would be involved in agri and dairy, which would mean that they would have some kind of agricultural land that they would be cultivating, and they've got the 2 or 3 seasons in the year, depending on which part of the country they are in. They would probably have a couple of cows, buffaloes that would be milching, that they and thus they would be involved in the dairy business. They would, in the form of either being milk suppliers or being aggregators, where they supply to where they buy the milk as well as supply it. And then they would typically have 1 or 2 small businesses at home, which could probably be like a small fabrication unit, could be an atta chakki, could be a kirana shop, could be a mechanic, could be a civil contractor. You may have some member in the household that would probably be working in a nearby factory on wages. So, as a household, their income would range between, anywhere between 4 lakhs to 40 lakhs annually. Uh, but because not a lot of this would probably reflect in your ITRs, or they would not have ITRs, would not reflect in your bank statements, because the agri income is in cash, the dairy income is in cash, the wages are in cash. Thus, they don't have easy access to formal sources of credit. Let me take a minute. Let me just show you how these guys look. Right. So I've taken a couple of examples. So this is a gentleman called Sohan, 7 members in his family, 4 adults, 4 engaging in earnings. They've got 3 sources of income. They've got one fabrication unit where they do the fabrication between the tractor attachments to the tractors. They've got cultivation, so they've got some land. They've got dairy where 5 cattle, 4 are milching. You look at the pictures. This is how a typical customer of mine would look. Over the last 4 years, we have given him cumulatively 6.5 lakh rupees over about 4 loans. So we started off with a small loan, and then we kind of grew with him until we are relevant. There'll be a point when the customer becomes large enough that we will not be relevant for him anymore, and he'll probably move to a lot more formal sources of lending, which is the banks and at better prices.
Anirudh, maybe uh, a naive or controversial question. Most of us on this call are living in urban centers. Many of us may not have interacted with customers like the ones that you serve, right? And all of us have the luxury of sitting in nice air conditioned offices behind nice glass buildings. um, One of the things that can will naturally come to one of our to our minds is, how do you make sure that the loans that you give will come back, right? And given that this is a certain rural economy and in partly informal sector, you talked about cash as being the source of income. Help us understand, what does Navdhan do and what confidence you get in terms of your operations.
Sure. So, okay, let me start this question. Let me start answering this question by saying that, there are 2 parts to our lending. Okay. One is the technology that we've built, sitting here at the head office. We've got a very large tech team, and we've built an entire platform where my customer, from the point when we log in the customer till his collection, everything is digital, right? So the underwriting, we've tried to use some machine learning. We've tried to give some intelligence to our systems based on whatever we know of the rural parts of the country, right? Multiple trades, and this is something which is constantly being enhanced. That's one part of it. The other part of it is, rural lending cannot happen if you're not physically present. We do not believe that we can sit here, as you rightly said, in our AC offices and start lending to rural India and expect the underwriting to be perfect and expect us to collect the money as well. So we've got our feet on street. We have got nearly 80 plus touch points being physical presence. We have got nearly 1,000 people on the field, over 6 states, and there is a face to the name, there is an office to the name, and anybody who has a problem can come and see that we are physically present, and vice versa. Now, this is the one part to tell you that, we're not sitting here and lending to random names or random Aadhaar cards. That's not what we are doing. There is a whole lot of sequential and multi-layered underwriting that is done, where uh, there is multiple meetings done with these people. There are surrogates used to assess their income. Surrogates would be thing again intelligence that we have built over the last 5-6 years. For example, if there is somebody who let's say has five cows or buffaloes. um we typically know in Madhya Pradesh, a typical cow gives about 20 liters of milk a day. A liter of milk sells at about 40 rupees a liter. So that's about 800 rupees of revenue per day, which is 24,000 per month because there are no weekends and offs when it comes to dairy. So there's 24,000 a month. We know typically to maintain one cow or buffalo, it costs you about 10,000, and so 14,000 is the net revenue that these guys make, right? And this is what the family feeds off in addition to the other sources of income. Similarly, if he's got a 100 square feet shop, you typically know that if the shop has decent groceries, this would probably be about 50,000 rupees of stock with a margin of about 10%. And you know that in rural India, this rolls over about two times. So you're talking about a 10,000 rupees net of cost income from the shop. So these are the surrogates we use to study, to evaluate their income. We also take into consideration if there are young children, so their education cost, if there are maybe older people, maybe some medical costs, and then we assess what their household expenses would be. And then we decide on what is the lendable amount of spare cash that this person would have that we are able to lend to this person. Other than that, there are multiple layers of reference checks, which would be neighbors. See, what happens in villages, these guys are very, very close knit. So you'll get both good and bad information very quickly. Unlike probably, all of us who are most of us living in metros where probably our neighbor also doesn't know our name. Here, everybody is known. We do ref checks with their employers. We do ref checks with their suppliers. We do ref checks with their customers to check on, who this person is, how their lifestyle is, how is their monetary activities, and if this person is lendable or not. Other than that, one major myth in our country is that rural India, so probably these guys would not have a credit history. You would be amazed, and so were we, when we realized that there is no such thing as a new to credit customer. Uh, Everybody in rural India, as a household, would have a credit history. If there's no credit history in an entire household, it's a red flag, and we don't lend such households. So, as a household, somebody's taken some kind of loan. It is being recorded. Today, the guidelines around reporting these customers, however deep in rural they would be, are very, very strong. And we are doing it ourselves. So we realize that there is a lot of data out there to rely on. It's just a function of how well you study it, how well you crunch it, how much intelligence you give your systems, and how quickly you're able to service these guys. And
Yeah.
that's it's a combination of all of this, physical presence as well as AI, ML, as well as some assisted technology to be able to evaluate and service these guys.
Fantastic. And this is real India, and this is where the bulk of Indian population, the credit demand lies, and to be able to solve that in a manner which is both digital and physical, I think is a very interesting combination. Maybe Anuj, we segue this into seeing the results of this strategy play out, right? Would love for you to walk us through some of the financial highlights, both in terms of size of business, credit performance, and also P&L highlights.
Sure. So let me just quickly take you to some broad numbers. So again, as a history, we started in 2019, and then COVID hit us very quickly, which allowed us to, take a few steps back, work on technology. We started to build our technology before we even got our license. Then we got a license late in 2020, calendar year 20, and we effectively started lending in 2021. So the performance you see is over the last four completed financial years and the first half of the current financial year. Over the last few years, we have only grown at a pace that probably we are comfortable with, considering it's a very fragile market. So again, our disbursements from 25 crores done in the first completed financial year to 207 crores done in the last completed financial year. This year, we are looking at clocking anywhere above 300 crores, because usually your disbursements are more skewed towards the second half. That's just how financial services industry works. So this year we'll probably close at about 300, 350 crores. In terms of AUM, currently as we speak, because we are sitting in the month of December, this is numbers up to September. As we speak, we are at about 350 crores, and we're expecting to close at approximately 400 crores of AUM. In terms of revenue, gross customer revenue, last year we earned about 69 crores gross customer revenue. This year we are looking at clocking about 100 crores of gross customer revenue. In terms of portfolio quality, uh, uh, so let me also tell you that, over the last 18 to 20 months, the entire credit cycle, the entire lending industry has been a little on the tighter side, and those who probably uh, were very strong with their underwriting, very strong with their collections, were the ones who are doing fine today, and I would want to believe that we are one of them. In terms of numbers, we have an NPA ratio of about a little over 4%, which we think should over time stabilize and probably be in the range of about 3%. The reason it's at 4% is because the last 18 months have been a little on the tighter side, and that's something that we all see through results of banks and other NBFCs on the listed side as well. But we also believe that we are at the end of this. The last 2, 3 months have been really, really good, and both in terms of business as well as collections. And we would want to believe that this trend will continue over the next few months. And so these numbers are going to stabilize. Uh,
Understood.
Also, if I may add, in this through this situation where the last 18 months have been tight, we were one of the few organizations that has been able to raise our Series A of about $12 million. It was led by some really reputed organizations like a subsidiary of NABARD called NAB Ventures, and between the crisis, getting this money was something which has given our balance sheet a lot of strength. So in terms of our numbers, other than P&L, we sit on less than 1x leverage. So we easily have the ability to raise about 300 to 400 crores of debt going forward. Before I raise the next round of equity, we sit at about 70 to 80% of, a little above 70% of capital adequacy. RBI's benchmark is 15%. So we are much, much, much more capitalized, right? And at all times, we sit on a decent amount of liquidity, which kind of covers us for the next 6 to 9 months of expenses, payments, etc., etc. And that's just a policy that we've always maintained.
Yeah, I think reflecting on the NBFCs that we have seen in the last 12 to 14 months, I think what you said is absolutely true. I think generally there's been some increase in NPAs across segments. Um, Most NBFCs have not seen the growth that you have seen in the last 12 months. And I think that is on the back of the liquidity that you have and the capital adequacy. Anirudh, if I'm correct, capital adequacy is slightly north of 50% today versus a 15% requirement. I got my
It's slightly north of 70% today.
70%, sorry, 70%, 71% today,
Yeah.
versus the capital requirement of 15%, the capital
Correct.
adequacy requirement of 15% from RBI. And that obviously puts you in a comfortable position. Maybe linking this, and you made a brief mention to NAB, but it'll be great to hear a little bit more about the shareholders uh, at Navadhan and also some of the corporate lenders that you have on your balance sheet.
Sure. So let me just quickly jump to the slide. So let me just quickly talk you through how our fundraise journey has been, and then I can talk about a couple of investors and lenders. So, like I said, we started in 2019. We did our first, typically how startups work is they do their first angel round, friends, family. We did that in 2021. Thereafter, in 21 November, we had our first institutional investor. This is Flow State, which is a micro VC that invested about 1 crore in us, along with a few more angels. Then in March 22, we had Anicut and Bopa come in with about 10 crores. Anicut is a very, very large fund. They came in through their angel fund. Bopa is base of Pyramid Asia. They're a Singapore-based fund, focus on in micro focus on financial services in Southeast Asia. Then in March 23, we had Varanium come in. Varanium is a $1 billion fund manager over multiple funds. They manage nearly $1 billion. They came in, they trusted us with our business model. We had Gemba, which is another micro VC that came in. This was again about $2 million. Thereafter, in December 23, Prime Venture Partners backed us. This is again a fund manager that manages nearly $500 million. Again, over multiple funds. They've got funds based out of US, Mauritius, and the fund managers are based out of India. So they came in, and then our earlier investors doubled up. Thereafter, in March 25 is when NAB came in, where they led the round. Prime doubled up, Varanium doubled up. So cumulatively, we've raised about in rupees 160 crores of equity, and we have a mix of impact investors like NAB Ventures being a subsidiary of NABARD, Prime being a tech-focused, Prime and Varanium being tech-focused investors. Cumulatively, all my investors together, they manage over $2 billion of AUM over multiple funds. So yes, we've been very fortunate to be supported by such good names, and we've also been fortunate to be able to do a fundraise nearly every year since the first time. So every financial year we have raised money. Obviously, with equity, you get backed by lenders, and that's something that we thrive on because we leverage ourselves. So we have raised money in the form of debt from ICICI, DCB, AU. These are the bank. Again, GRIP is our latest lender, so to speak. Then a whole lot of good listed and unlisted NBFCs have backed us. So there's guys like Hinduja, Ugro, Mars, Vivriti, Northana, Caspian, UC, Oxido, etc. And so the list is on. I have totally about 30 lenders. I have in the form of banks, NBFCs, platforms, funds, and now I'm also in talks with certain DFIs to look at raising money through NCDs and ECBs. So yeah. Also, if I may add, in March this year we were rated BBB minus, which by India Ratings, which is an investment grade rating for the long-term paper, and all our short-term papers, all our PTCs have been rated as A minus. And to date, we have 100% collection on all our PTCs.
Perfect. Thanks for that, Anirudh. I think we've, just to summarize the first section of this webinar, we've obviously heard from you on the caliber of the management team and the focus that you have when it comes to the segment that you're targeting. And I think a lot of that comes from your prior experiences, including with Spandana. The performance of that book, the performance on the PNL, and then the incredible support you have both from equity and debt lenders. We're obviously happy at GRIP to be able to bring retail investors now into that book, both the PTC and hopefully in the future also an NCD. I wanted to move to the second section, which is more on the transaction itself. Many of you who are listening would be familiar with what an SDI is, but as a quick recollection, SDI or a securitized debt instrument is a SEBI regulated instrument. It is rated by a rating agency and it is also listed on the stock exchange. What it effectively does is it picks out a certain loan pool from what Navadhan has originated. So let's say Navadhan has originated 1 lakh loans. The SDI picks out 2,000 of those 1 lakh loans that meet certain criteria set by RBI for securitization to happen. This criteria includes a certain amount of seasoning. For example, the loans must have been on Navadhan's books for at least 6 months. There must be no delay in any of these loans. And then certain other criteria that RBI has established You can read the criteria also on our app and website. In addition, we apply certain filters to ensure that the pool selected is of a certain quality, including the credit scores of the lenders, prior track record with Navdhan, what is the coverage ratios on the loans, and this criteria is also mentioned on our app and website. At the end of that, this pool of loans that is arrived at is what is available for investment as a collective instrument, and hence the principal and interest from these 2000 loans becomes available as returns to investors in the STI. This is the instrument that investors are purchasing today. The expected maturity is about 18 months and provides both interest and principal on a monthly basis. I'm going to take the liberty to to maybe ask a few questions from Anirudh on this pool. Anirudh, you've obviously done PTCs before, probably the first one to an OBPP platform, but would love to understand your perspective on number one, the requirement to do a PTC, and as you think about the construct of this PTC versus others, is there anything that you'd like to highlight that stands out? Our objective always is to make sure that we are offering things to retail investors that are market standard and also available to institutional investors.
Thanks, Nikhil. So, look, I mean, being an NBFC and money being our raw material, we need to keep raising money in various shapes, forms, colors, right? So, while we do our regular debt on balance sheet through banks, NBFCs, we do also a lot of off-balance sheet play through PCs, business correspondent arrangements, as well as co-lending. PTC is a much smoother way to probably raise money. We obviously go through some really rigorous underwriting for the last, I think your team and our team has been on it for the last 1.5 months. But I think this is one avenue that we are now trying to get into, and we would want to do regularly. We'd want to keep raising money because we believe that if retail investors are able to show confidence in your portfolio, institutions will certainly back it. Secondly, there's no restriction on how much you can do, right? So if I have the ability to offer a decent pool to platforms like yours on a say a quarterly basis, I'm sure, and you've got the investors who like because see, I am also personally an investor on a lot of platforms like yours, right? So I do wear the investor hat when I go into such transactions, and I do see that this instrument or this asset is worth investing in. Is it priced well, and is it giving me the right return? With obviously minimizing the risk as much as possible. As an investor, I think this is a brilliant product. And so if I have to get back into debt raise mode, I think this is something I would want to keep doing on a regular basis. Now that we've started, I would want to believe that you would be able to see a transaction between us almost every quarter.
Fantastic. I'm going to take the liberty to just share a screen, and I hope you can all see it. This is just a screen of our current website, where we've outlined this opportunity, and I'm just wanting to share a few features to make sure you look into more detail. But one of the key aspects of the SDI that Anirudh's talking about is the diversification of the loan pool, because ultimately that is what mitigates the risk in an SDI. What we've outlined here is how the 2000 loans, and effectively, if you're investing a lakh of rupees among 2000 loans, your exposure per loan is about 50 rupees. So you're highly diversified. These loans are also diversified by the branches and the states in which the business operates. And I know there's a question on the chat box. So the business operates across 5+ states, 66 branches, actually probably more, but these are the places in which the loans have been picked up to give exposure and to diversify the risk. On an average, each loan has already been held for 9 months. There are some loans for less and some loans for more. And the bureau score on an average for a customer is 741. Anirudh spoke about how everyone has a credit history. If there's no credit history, they do not lend, or that's a red flag to them. but the average credit score of the customer is about 741. The median score that you see here is about 726 to 750. So it's a fairly high credit quality customer with an established track record. There are no new to bank customers in this pool. And even from a, the coverage on income of the loan is fairly small. So it's only 30% coverage. So I think there are multiple parameters that have gone into the selection of this pool. Um, and that allow for both diversity and credit quality to be established. This is an A minus rated transaction, as Anirudh referred to earlier, for all the PTCs that they've done, and then provides returns on a monthly basis. Um, we have also outlined what these returns are. So I'd encourage you to go and see it. One of the most attractive features of an SDI is the ability to receive principal interest on a monthly basis, hence reducing the exposure that you have in the loan. Unlike a bond, which is typically a bullet repayment structure, an SDI pays both principal and interest on a monthly basis. Okay, great. Please, I would encourage you to look for more details. The intent of this webinar is not to give you all the information that you require on this instrument or Navadhan. There's a lot of information available, including the credit rating rationale, the information memorandum, as well as documents from the company on this transaction. Anirudh, I'll go to the last couple of set of questions before we let you go for the day. Talk to us a little bit about future plans, right? Obviously, investors who are investing in your company are taking a bet on Navadhan as well. It's great to hear your strong capital position, but as they think about the future, and you talked about a issuance every month, how should we think about the future for Navadhan and what your plans are?
So I'll tell you our long-term plans. I think, see, look, we're here for the long haul. It's been 6 years now, and I think we haven't even achieved half of what our entire journey is going to be. Over the next 5 years, okay, I don't want to say I don't want to pin it down to 5 years, but over the next half a decade to a decade, uh, a couple of milestones that we are chasing is one, we want to be the largest uh, digital rural lender, uh, which basically means that we want to be the largest player in the space. Second, we definitely want to go public. So we want to become large enough. Firstly, we want to be pan-India, and then we want to go public. Uh, Third, we want to uh, eventually become a bank. Now, becoming a bank is obviously a very, very, very long, cumbersome journey with a whole lot of compliances, governances, etc. Right now, what we are creating is asset that you get into the liabilities as well. But eventually, we'd like to become a bank as well. So over the next 20 years, I think this is what our plan is. Uh, in the short term, I think we are looking at so today, as I said, we are at about 350 crores of AUM. We are looking at reaching 1,000 crores of AUM over the next 2.5 years. We are looking at increasing our presence, our geographical presence. With every capital raise, we go into more geographies. Somebody, some gentleman has just asked, where all are we present? While you had put it up, let me just quickly mention, we started off in Madhya Pradesh. We started our business in Madhya Pradesh. Then in 2024, we got into Gujarat, Rajasthan. In 2023, we got into Gujarat and Rajasthan. And in 2024, we got into Orissa and Karnataka. And then this year, we got into Uttar Pradesh as well. So, we started off in MP as a center, and then we've kind of grown all around it. So our plan is to go further south as well as places like Bihar, Chhattisgarh, uh, and, uh, uh, and some parts of the east. So the plan is to be a pan-India player. Plan is to serve as many underserved, unserved individuals as possible. The plan is to create a good, clean book, which is looks attractive to both lenders, investors, and to the customers. I mean, because the customers should like you as a service provider, and to eventually go public and to become a bank.
That's a fantastic ambition to have, especially the bank. Great to hear that. But it also sets a certain standard of corporate governance and internal policies that you are already positioning yourself for, if that's the ambition. Wish you all the best. We look to partner in that journey of doing it. But once again, thank you for your time today. I think this has been very helpful for all of us to understand more about your business and about the transaction itself. I'd like to just end on a cautionary note, which we always do, is that investments are subject to risk. These are fixed income investments. They provide you with a projection of monthly income, but they are not guaranteed in any way. Please, as an investor, make sure that you look up all the information provided. Feel free to reach out to us via your RM or via support channels to make sure we can provide you any other information that you need about the business and the opportunity. Thank you to everyone for joining the session today. And Anirudh, thanks again. Have a
Thank you.
great.
Thank you, Nikhil. Thank you, everyone. Thank you.
Thank you. Thanks.
Investments in debt securities, municipal debt securities, securitized debt instruments are subject to risks, including delay and/or default in payment. Read all the offer-related documents carefully.